Hello everyone, this is Evan here from the Trade Risk on Friday, July 22nd with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, individual names, and then finish off with a few trade ideas heading into next week. Now, before we jump into the video, I want to remind everyone that I am hosting a webinar next week. It's during market time, 1 p.m. Eastern. It's Tuesday, July 26th. It's going to be all about trading strategy, trading setups, entry, exit, trade management, all the good stuff of what we look at every single day. So sign up at thetraderisk.com/webinar. Just drop your email there. If you can't make it, I will send you a recording, but only if you're on that list. So drop your email there and hope to see you next Tuesday. Now, getting into the markets, we finished up 65 basis points on the week. This is the S&P 500 SPY ETF weekly time frame chart, and you can see we closed right at the highs thanks to Friday's rally back towards those highs, finishing up 45 basis points on Friday alone. So let's talk about where we came in this week. Right here, this was Monday. We had this inside day on Monday. We had basically an inside day on Tuesday. We popped higher on Wednesday, breaking this 4-day range. And then Thursday, we came right back to the bottom end of that range, and Friday yo-yoed back to the top of it. So really, we went sideways for most of this week while still making forward progress. You can see here, if we drew some type of trend line, you'd see we did accelerate a little bit here, and we did close near those highs. So heading into next week, we want to see if we can convincingly stay above 217. We've faltered a few times, once here last Friday, again here on Wednesday, and then today we got that close above it. But do we actually see follow through next week? That's what's going to be interesting. Now, for me, I've gotten a little more defensive. For me and members here, we have started to scale back some of our exposure. We've lucky enough to have captured a good chunk of this run up throughout July, and we've been paring back and taking profits pretty aggressively here Thursday and Friday. We are still long, we are not short, and we still believe that on the intermediate term time frame, long-term time frame, this is a market you do want to own. But for the very short term here, we are lightening up after a nice run, and we're just getting ready to see how this market handles into next week. One thing that I look at pretty closely is the McClellan oscillator, and you can see ever since the 12th of July, it's actually been trending lower. You can see as it's now back almost towards the zero line, depending on which McClellan you look at, the numbers could be a little bit different, but the behavior is going to be the same. So this little bit of divergence here, that happens in every strong rally. If you go back to April and March, you can see it did start to taper off, and we continue to trend higher. So I'm not trying to say that because this is diverging lower that the market has to suddenly pull in. All it really means to me is that the very high level kind of easy, if there is an easy word in markets, momentum was made during this period. And while momentum and breakouts can still work where we are, it's going to be more difficult. That's been my experience when you start to get this kind of divergence here. So we can absolutely still continue to grind higher, and I think if we do head higher, it is going to be a grind. And for me, this is just a way to lighten up the exposure and take away one factor that I look at anyway for lightening up, but still, again, wanting to participate in this rally. So that's the way I'm looking at things heading into next week. 215.50, you have a good line in the sand right in here, right near all of these clusters of lows for the past 6 or 7 trading days. This is a great spot for upper level momentum to trade against. If we start to lose these lows and pull back over, roll over, whatever you want to call it, that's when you could start to really tighten up. Maybe try some shorts if you're in, if that's your style, but that's essentially what I'm looking at. On the upside, of course, there's no resistance above it. We're at all-time highs, but again, we just want to see if we can stay follow through above that 217 level. So that's the way I'm looking at things. Still very constructive, intermediate term, long term, short term, a little bit more cautious. That's the way I'm playing it. Now, IWM is very interesting here because it's in a very tight range, a peculiarly kind of tight range here, especially for the amount of time. It's been trading in just a 2-point range. And again, we've discussed this this significance of this 120 level going back here all the way to 2014, all the multiple tests and failures at this area, and you can see it's once again kind of showing its influence here on the market. So again, this will be a very key index market to watch, are the small caps next week, Monday, to see if we can start to lift above this cluster of highs. That should give some new momentum that could take the SPY higher, continue that grind higher, so on and so forth. So keep an eye on the IWM. Same thing on the downside, below 119. If we start to break below the cluster of lows here in this tight range, then you'd have to be concerned for a little bit of a pullback, pause, or roll over, depending on how you want to look at it. Now the Qs also in a very bullish formation. We discussed this 115 area, which was the previous all-time highs here from 2015, or the multiple year highs, not quite all-time highs, but this could still be the target that we're heading towards. Again, we're in the midst of earnings season. A lot of these names weighted in the NASDAQ 100 are going to be reporting next week. Some of those high beta names will be reporting next week, so just be aware there. But we are strongly trending higher here, still making kind of new momentum highs after breaking out of this pattern and this series of lower highs that we had in place throughout April and June. So the Qs still very constructive as well. So it's a mixed bag. Market's still very healthy. Momentum arguably slowing a bit, but the trend and multiple time frame sort of alignment is still higher across markets. Now getting into some of the other markets, TLT trying to put in a higher low here, particularly on Thursday. Interesting day with this gap lower back into this previous open gap from the 27th of June. You can see we did gap lower and then just drove higher all session, closed on the highs, and a very similar kind of thing happened on Friday, small gap lower, and we just continued to trend higher throughout the day, a little bit off the highs, but still trying to put in some type of higher low here. It's interesting, very tempted to try and get back on board this on the long side, but just watching, waiting for this maybe to develop sideways a bit more. But I am interested in TLT and trying to get back into this trend. Keep an eye on that early next week. As far as oil goes, continued to slide here, particularly on Friday. On the week, it finished down 5.19%, and you can see it's still kind of riding the lower trend line here in this channel as it starts to put in a more meaningful retracement from the February to June rally. So it's broken through some support, this 1060 level, which was sort of a horizontal level where buyers were stepping in, was trying to hold in here for a few sessions, and then that finally gave way later this week. So we'll have to see if the weakness persists there. 8 and 20 firmly down, momentum making new lows here, so you got to be cautious on USO. Not an interesting long as of right now, but let's see how that one shakes out next week. UNG, which saw a nice pop here on Friday. This one has been consolidating, as we know. It kind of emerged from this this pattern here as it broke this trend line in June, had a nice run up, pulled back. It's been very kind of choppy in here, pulling back, but it had a nice gap up Friday. I like this. Let's see if this can continue higher next week. If we look at gold, this one also kind of pulling back to its fast moving averages here, bumping up against this trend line, which extended from these March highs. We'll have to see if it can hold this 125 level right at the 20 period right now. Silver also in a situation of a little bit of a pullback off of the highs here. You can see it got up to about 1940 or so, got as low as 1840, so came off about $1, and you can see it's just kind of hanging out here inside day on Friday, from Thursday's sort of large range day. So we'll have to see if silver can start to stabilize a bit next week as well. Now moving into some of the sector analysis, semis continue to really be taking charge, taking lead here, have been off to the races recently. Weekly chart, you can see just gapping away and really running away with a lot of strength. So there's been a tremendous amount of strength in this sector. Overbought perhaps, but still quite a bit of leadership there. XLK, as it would make sense, the technology, which probably has a lot of those semis in here as well, continues to work itself higher. And healthcare has been pretty strong. Also, weekly chart, you can see breaking above recent resistance resistance, and resistance from 2015 heading back up to those highs. IBB, XLV, all demonstrating some nice strength. Now, particularly on Friday, though, the standouts would be XLU Utilities, 1.3% day higher on Friday. Nice breakout from this clean consolidation pattern, perhaps a nice continuation pattern in this trend that has been in place for quite some time. So XLU also looks to be back in motion. A lot of those individual names under the hood are in nice kind of actionable breakout patterns as well. And as we could expect, the real estate index fund, IYR, also been breaking out now this week, particularly Friday, to not all-time highs, but to recent highs, multi-year highs, as this continues to extend now above $85. So that's sort of the notable strength in some of the sectors there. If we get into some individual names now, let's start it off with Amazon. Now, a lot of these names have earnings next week, so you do want to check those dates. I believe Amazon is one of them, but you can see it's kind of coming back up higher here, stalled out a little bit. Be interesting to see if this is some type of lower high here against, this higher, this all-time high right here. And if we do get some type of rollover, I think below 730 would be a nice trigger short. However, tactical short, again, you're still battling a very strong monster uptrend on longer-term time frames. But you do have those earnings coming up, so suspect that you won't get that trade cleanly in the coming days before earnings. Facebook putting in a nice session on Friday, came back below 120 and then reversed higher, closed around 121. Still all-time high, closing weekly high in Facebook. That looks constructive. Check the earnings date there. Twitter also reports earnings on Tuesday. This one had a downgrade today, digested that news nicely though, closed at the highs. It's been in an uptrend now since June, and it's coming back to the top end of this range that you could kind of point out here, at least this high from March of 2016 up around 1950. So maybe there's some more room in here, but earnings again will be a catalyst to sort of move that one whichever way it decides to go. Netflix looking a little heavy here. $85 is very critical. Weekly chart, you can see why. It's tested this level many times before. Besides the brief kind of pierce below it in February, it really hasn't got a convincing follow-through close below 85. So I think if you take out this kind of low here from the earnings day, this immediate post-earnings day drop, then you're in for some trouble here in Netflix. So be cautious on that, or opportunity on that if you're a short seller. Google continues to just kind of extend higher. This one has earnings this week again. I think it's in the process of trying to fill this gap, which I believe was from last earnings. So let's see how this one reacts after that announcement. And Tesla, which has been very headline driven, continues to be a big headache in here, just kind of moving along sideways in between this 220, 230 level. Let's see which way it ends up going. I'm not really interested in this, but it's kind of doing its back and forth consolidation as of right now. Now, as far as some trade ideas, CMG had earnings out yesterday. This was Thursday evening, and the market responded favorably to them. You can see we did get a breakout here from this trend line that has been in place all the way since late 2015. Weekly chart still a bit concerning. You can see the 8 and 20 still not bullishly aligned yet. So we'll have to see if CMG can hold up here and make continuation. This 460 area, 465 is going to be a big one to crack. If we can get above there, then you really got some room to run. But this area right up, coming up to this 450, 460 area is going to be tough for CMG. We'll have to keep a close eye on that one next week. VEEV also in play here as sort of a continuation pattern. It's been making new highs. Had a nice candle here on Friday. Just keep an eye on it. Not all-time highs, but making new trend highs. As of this year, it's been in a strong uptrend, coming all the way from $21. It's already up, almost a double so far this year. So just keep an eye on this one to see if this trend can continue. Next, let's take a look at SHAK, SHAK. This one's been emerging, also snapping above this trend line that's extended from mid 2015. You can see this base is starting to emerge higher. This one's got earnings coming up early next month, I believe. So you still have some time here, but this one's starting to emerge higher. Looks pretty good. And then finally, Square. I think I pointed this one out the other day. Also finished pretty nicely on the week, 2.85% just on Friday alone. It's been basing out here for the past couple of months, and it's starting to emerge now, so keep an eye on that. I'm not sure when the earnings are, so just double check that date before getting involved. And that's all I have for today's video, so I hope this helped. Once again, check out the webinar here for next Tuesday, traderisk.com/webinar. Hope to see you there. Drop your email. Thanks for watching, guys, and I'll catch you next time.